Good evening, everyone, and late evening for many of you. Just an evening for over here in LA. It is October 4 for some of you guys, 1:30 a.m. Eastern. Welcome to episode 15 of the Hidden Edge Pod. We are rolling on this thing, man. Episode 15? Wow.
Is it really 15? Yo,
It
put
is
me on the other
episode
side,
15.
man.
Oh my
Get the other
God.
side.
All right,
There
there
we
you go.
go. Yes.
I seriously got to fix this orientation of my camera. Anyways, yeah, good to see you guys. What's going on, Rage Rocket? What's going on, June Seymour? Long investment. What is up, man? Joey ETF FaceTime ET phone home. JK. What's going on, guys? All right, so we have an interesting episode for you guys. First thing we're going to get into is the port worker strikes a deal. All right, now that's going to be a pretty interesting one because we actually originally planned on talking about the port strike and how it might last for a little bit, and then all of a sudden the come a deal. It's like, well, then there goes that bit, but might go over a little bit of some facts over there. Then we're going to talk about China, how much of a run up it's had, and how well. And I don't know what Kris thinks, but I personally think there's a little bit of chasing going on. After that, we're going to talk about a special topic, which is the most important thing, and we'll get a little bit into that later. And then we're going to talk about energy, specifically nuclear, and then bring in something else after that. So, how's it going, Kris? How's your night going?
So far, so good, man. Everything's looking okay. I just quickly showered and shaved a little bit. So you guys are seeing
Okay.
a little cleaner Kris
So
than you
you didn't
saw.
do it.
Like,
You didn't do it for the cash flow. You did for the hidden edge.
yeah, man. I had to, I literally, I got out of bed. I read some stuff really quickly. And then I was like, all right, Matt, let's go. Let's start this. So, like, I'm living a double life, man. Always working, researching, podcasting, but it's fine. It's just the name of the game sometimes.
Yeah, I'm living a triple life. So I got the podcasting, I got work, and I got the family too. So I don't even know
Yeah.
which life I'm living right now, to be completely honest. But
Yeah.
that's good. That's good, man. That's good. That's good. So, wow, tomorrow is Friday, or technically today is Friday for some of you guys. And we have the unemployment rate as well as the ADP jobs data coming out tomorrow, which is going to be a pretty interesting thing. I mean, given that, speaking of employment, so now that the strike is done, just to lay down the facts, we only were 3 days into the strike. What was it, about a $4 to $6 billion run rate as far as costing a lot of companies, costing the GDP on a quarterly basis per day. Actually, no, I'm sorry, per week. So we haven't even reached that 1 week mark. And to me personally, like the fact that it ended so soon meant that it was going to be that bad, and they had to figure out a deal. I mean, to be honest, I saw I was looking at the price action of Amazon, and I mean, I didn't really think it was going to impact them that much, even though, like, they do have Prime Day coming up next week, then the holiday sales and everything. I guess the impact would have been pretty severe, but I mean, Amazon took a pretty nasty tumble. However, at the same time, it did have a crazy run up, so I wouldn't say that wasn't somewhat unexpected. What do you think, Kris? What do you think about the deal that just came out?
I mean, these guys had all the leverage, right? I'm glad that they won, but at the same time, I was telling Matt, I'm a little worried that now every union boss in the country is going to try to figure out a way to leverage their critical nature to basically get a deal similar to this one. And the thing is, in the long run, it's always nice to have workers get paid more. As a worker, you want to get paid more. The problem is, if everyone gets the same raises, that kind of defeats the purpose of the raise, right? So, if you get a 5% raise, I only get a 1% raise, then, you kind of benefit. So in terms of real wages, you do well because inflation is only 1%. Problem is, if inflation ends up being 5%, then all we're doing is just, basically supporting what's already out there. So if you look at like wage growth for the last 20, 30 years, it's been pretty flat. And so to some degree, that's a good thing, and to some degree it's a bad thing. It provides a lot of stability when it's like not flat but like growing slightly, and especially if it's growing slightly above the rate of inflation. The problem that tends to arise is if wage inflation goes too high, what happens now is that every other industry is going to try to catch up. So like now me, I'm getting paid less than a longshoreman and I have more money, I have like way more experience. And at the same time, I have a college degree and all this other stuff. So now I'm more incentivized to go to my, my own position and be like, look, I need a raise. Like, look,
You know,
if these
you need to start a
yeah.
union. You need to start a
No, I'm in a
union.
union. I'm in a union. My
But you
union.
need to lead the union, man. You need to
No, no,
lead the
no,
union.
no, no, no. I'm just saying
That's
that
what you
like
need to do.
every union right now is going to try to fight for a very similar deal now. They're not going to accept like a few points here and there, and so, and the thing is like eventually people think that, oh, look, it's the greedy bosses that are going to end up losing, because now they have to pay their workers a fair wage.
Oh, they don't lose.
But first of all, they don't lose. All they're going to do is just pass on the cost to us as consumers. And
Yeah.
now everything goes up slightly. So if it goes up slightly, now we're more inclined to demand higher wages as well. So it's one of those cycles that keeps going on. And the thing is, the magnitude of the raise is something that's probably kind of crazy. It's like 60%, even though it's over, I think, 6 years. But that is still a freaking high amount. So,
what is that, CAGR, like 6 or 7%? Annually, so you're kind of beating inflation there, right?
Bro, you're way beating inflation, dude. You've been a longshoreman. I'm telling you, I'm gonna start.
I know,
but
but
as a longshoreman,
6 or 7 years for 66% raise, like that's not like you see like people see 66% at the head or 61.5% in the headline. They're just like, oh wow, that's great. They're not taking 55. What's going? But yeah, if that's displaced over like 5 or 6 years, that's like 6 or 7%. So I mean that kind of makes sense.
Inflation,
I mean, that's kind of the average.
Yeah, but the federal, it's not the average. See, this is the problem, dude. You think that 5 or 6 is average now. It's not average.
It really depends on what kind of field you are. Like they work for a union, right? And it's probably a high demand field and it's very strenuous on the labor, right? Like, cause you're saying that they make more than you do, but you sit on your butt the whole day working, right? They're freaking, that's like hardcore labor. And handed though, it's not like simple, hard labor. Like this is like, these guys got to know what they're doing. And they got to do it in a crunch. Like they got to be quick with it, right? They're moving items. They're moving items across the court. I'm not slacking with the smoke break. They're going to screw over like an entire fleet of products.
I'm not going to disagree on how important their job is or how much labor goes into it and all the other stuff, right? But if you think about it, this is one of those jobs that doesn't require a lot of formal education, doesn't require a high barrier entry, and majority of the jobs end up going to people that it's almost like nepotism, right? And I mean that's like one of the dirty secrets that I'll let out. If you're in some of these union jobs that are out there, they're not like, okay, they're open to the general public and basically the best candidate gets the job. Like, no, this is like, I know a guy that knows a guy that knows a guy. Like,
everyone wants these type of jobs,
especially in like certain areas, localities. Like I know in New York, like you got to know people to get certain union jobs, and basically it ends up, and it ends up becoming kind of like this weird cancerous situation where now the costs end up getting borne out by everyone else, right? For that level of kind of like, and technically speaking, this is not how free markets are supposed to work. You're supposed to be able to get as much, like, you're supposed to get the best deal possible for the best outcome. So I don't know, man. I think Kris is a closeted sailor type. I don't know what that means.
Yeah. I don't know. I think she just meant she thinks you're in the closet. I don't think the sailor type is supposed to be on there. But anyways, to be honest,
I'll give you an example of one that I know. Like, do you know what a pilot is? Like when it comes to like shores, like do you know what a ship pilot is?
A ship pilot?
Yeah.
What do you mean, like?
Okay, so I was in Charleston. I was in Charleston, South Carolina, and one of the things,
I'm thinking of that movie with Tom Hanks. He was the captain.
No. So this was this was in South Carolina in Charleston Harbor, and the thing is like, so basically what happens is when you're in a ship, you get to a certain point, and then tugboat or the smaller ship guides you in, right?
Yeah.
Those people that guide you in, they make like way outrageous amounts of money.
That's not an easy job because it's like, I'm 1 centimeter off course here. Like that 300-ton object behind you is going to keep going.
No. So I agree that look, some part of the job is very important, but the thing is, the job itself, in order to become and get that job, you need to like basically, it's like third, fourth, sometimes even fifth generations of people working that job, and it's not open to anyone else. So there are people within that community that could also use a similar job. But the thing is, they're closed out to it. So imagine right now you have a field that's only open to certain types of people. You know what I mean? That's the problem that you run into with a lot of these jobs when you have like this position. So if you go and you look at the demographics sometimes and you look at the thing, they're very heavily demographic to like one thing, and everyone else don't have that same opportunity, you know?
So I wanted to I, did you ever see the video of I don't know if it's real or not, to be completely honest. The it's like said in China they're like automating ports, or they're automating the activity in ports, and like again, I don't know if it was real or not, or I don't know if it was staged or whatever, but like there was some serious automation they had there, and those people apparently in the video, like again, I'm taking it with a grain of salt. I don't know if it's real or not, but they were basically running the entire port remotely. Like they weren't even there running it. I mean, I think that's like probably a little bit of a concern here. There's this company called Symbiotic, which basically they're building the robotic infrastructure for a lot of warehouses in the country. And they got a backlog from Walmart for like 3 or 4 years, whatever, like a billions of dollars in the backlog.
Yeah.
You know, obviously, it's not something they could just do overnight. It takes like, I think their turnaround time is like 10 months or something. But like when you're talking about automating workers in a factory, like you don't need half the people in there. I'm not saying it's going to happen tomorrow, but I think they did have a little bit of a case here when it came to the automation. Actually, yeah, James Byrne called it out. That was one of the concerns. That's the reason why it's only going to happen until January 15 when they're going to postpone it. I think this has become a serious problem for them. Okay, like we're not talking about automating like specific developer tasks or whatever in the back end for infrastructure. We're talking about like physical labor automation. I'm not saying that's like low. I'm not saying that's like low tier, but like it would be easier to automate that than to automate like some desk job for a top paid engineer. That's all I'm saying. Go ahead. Go ahead.
But look at this. Like in Savannah, Georgia, and South Carolina, pilots earn an estimated $460,000 to $560,000 a year.
Wait, so those are the pilots are the people who tug the big boats. Those are called pilots?
Yeah, they're called harbor pilots. Basically, they guide like the larger ships in. But dude, imagine getting paid $500,000. And the thing is, the reason why they get like this much money is not because like, oh, you know, their job isn't important, because it totally is. But the thing is, in order to get that job, you need to be part of like this like old boys club, basically.
Yeah, no one can just get that job.
You know, and that's the thing. This is how sometimes these unions operate. So it's not like, oh yeah, just because like you want a job and you know, some people are willing to get trained, you know, do the hard work, get the right credentials, whatever they need to get this job. But unfortunately, you get locked out because you don't know uncle, you know, this uncle's that person's, or blah blah blah. So trust me, I've been in plenty of positions. I remember one time I applied to a VA job. Okay, when I first got out of the army, I applied to a VA job because I didn't have any experience, right? And I went there, I went to the interview, blah blah, and the guy, like the manager, said, "Look, man, I really like you. You had a great interview, but I'll be honest, like this is a position that's already been filled, and this was just a formality. Like I had to do an interview for some outside candidates, but this is already like filled, you know. But just leave your resume, and if something opens up in the future, I'll call you." And I never got a call back. And then after working in the industry for quite some time, I recognized what the issue was. It's because I didn't know the right people, and it's messed up, but that's the sad part, because they missed out on a quality person, you know, because of how like this old boys school club is. And the thing is, when you get into the VA, bro, that's like a lifetime job. You never get fired.
Yeah,
like you could
that's like working for the state or something.
Yeah,
like I know someone pretty close to me who works for the state of California, and that person who works there. I mean, there's a reason why you go to the DMV and everyone works slow, right? It's because like they're not in a rush. They know they're going to keep their job. And why
Yeah.
should they work faster if they're going to get paid the same amount of money? Like, I'm not saying that everyone works slow in the DMV, but like that mentality has built in that they're going to get their pension. They're going to get their wages. They have the job security, because it takes a lot for someone in the state to get fired or in a government job.
Yeah.
And they're covered by the union too. So
Yeah.
why work that hard?
Yeah, and like I said, the unions to some degree they're good because they do advocate for wages and everything else. But then sometimes the unions can get very corrosive to underlying industries and actually cause the downfall of industries. Like if you look at like General Motors and Detroit, Detroit has a lot of unions, of course, and that basically drove a lot of them. Not so much that it drove them into the ground, but basically the unions almost hampered some of that innovation that naturally came into the industry. And the union said, no, you can't use additional, like right now, one of the demands of the long term, you can't use automation. So it's almost like they fear automation, even though it could technically make some of these jobs that they have safer. And they could also help them, like do a lot less strenuous work. Because if you saw that automated port, but the thing is, there's
I got
also
the
a risk
video.
that, if you want to show it, we could watch
I
it.
want to play it, because this is like, I don't know if this is good or not, but we'll see. Hold on. Here we go. This wasn't the video that I saw, because like I saw it on YouTube. I forgot where it was, but I'll just play. It's just the first part of it.
This is the smartest port in the world. It's located 60 kilometers away from downtown Tianjin, a coastal metropolis southeast of Beijing. China operates more than 34 major ports and 2,000 minor ports across the country. But there's something unusual about this port. On the surface, it looks like any other shipping harbor, filled with cranes and containers. But here's the catch. It's very rare to find employees working on the ground. Instead, this terminal is fully automated using 5G, cloud computing, AI, and robots to operate the entire workflow. This is Terminal C of the Tianjin port, and this is the story of how China built the world's first smart, zero-carbon shipping terminal. China is...
Yeah.
Okay, so yeah, I don't want to play the whole thing. I got to give this person credit, because technically speaking, it's not like a CNBC video. So I'll just put that in the chat if you guys want to watch the rest of that video. But yeah, I mean, I think at some point, a lot of those jobs get replaced. And, when you have heavy machinery moving everywhere to reduce the possibility of someone getting injured, compliance and everything, you got to get rid of people off of the runway, right? Like you got to get people out of there. So they're going to automate the hell out of that stuff, man. I mean, it's not going to happen overnight, but it will happen. And some of these guys, they got to think about what they're going to do.
Yeah. Well, unfortunately, we're going to have to figure out ways to make more money. And the way that we know how to do it is by investing in the stock market. So
there you go.
Yeah, let's talk about that. How this is going to impact. I think short term, there might be a rally tomorrow. Basically, everyone's just going to be super.
I hope Amazon freaking rips, dude. Like, that would be amazing. That is my biggest position. And if that thing rips, it'll look really good for the port. Speaking of things that have been ripping lately, you want to go? You want to go? You want me to go?
China.
Wall Street changed China. So do you think we're going to keep going up in China? Or you think
for sure.
Yeah,
for sure.
How about right now?
Sure.
Right now, the thing is up.
Yeah. Oh, it's going to keep going up. There's no question about it. The only thing is from a risk,
it's up a lot.
Yeah, from a risk perspective, how do you manage it? And so I spoke to you about it. I took some profits, but the way I did it was I downshifted some of my more out of the money calls and actually just bought those back, and I sold some in the near the money calls. And so what I did is I got a nice premium for doing that. So I pretty much took most of my initial investment out. So I'd say about 80% of my initial, I already pulled it out. I still have a good portion, like a third of my position is still between the strikes that I had that I spoke about on the Patreon, but 2/3 of them I kind of brought a little bit closer, so that this way, just in case there is some volatility and there is some consolidation downward, I have some liquidity to basically buy more if I really wanted to. So it's just a prudent risk management move on my part. So
yeah, I had KWEB, so I think someone asked in the Discord or the Patreon before, and I've said it a couple of times. I actually have a tweet that I did post that just has a little bit of an explanation here. Let me just bring it up here. Here we go. So, all right. So HSI. Well, this was when I tweeted out about an hour ago. HSI was up 1.6%. I forget how much it's up right now. So the FX side, which is what you're in, is like basically the SPY or the SP 500 of China, and it isn't 500, but like it's large cap weighted.
Let's clarify one thing real quick. So
Yeah.
the one that this tracks is the Hong Kong Stock Index. There's also the Shanghai Composite, which is the Shanghai one is currently closed right now for Golden Week.
Yeah, it's closed for a week.
So just letting y'all know that this is not. There's two different. Even though it's one country, technically Hong Kong is technically part of China. There's two different stock indexes, so their listings are also different. So if you look at certain other companies that are listed on the Shanghai Index, those are different. So if you want to look at like that, the ticker for that KWA. Look up KWA.
Okay, hold on.
I think Crane Shares does one like that. So do that.
I don't.
No, let me find it. Hold on. Type in Crane Shares Shanghai Composite on Google, and I can look it up. I haven't done any research.
XDH.
No, that's not it. That's not it. That's
CYNA.
No, I want the one with nothing but A shares in it. Type in A shares. That's KWEB. Put a space on there and type. Hold on 1 second. KBA. Sorry, it's KBA.
Oh yeah, these are all like.
Share the other tab so this way people can see it. KBA. So this is the other companies that are listed in Shanghai. So this is like A shares. So you look at here like Mutai. Do you know what Mutai is?
I have no idea.
Man, you are so uncultured. At this age, you don't know what Mutai is? Mutai is like the Chinese like national drink. You know what I'm talking about? It comes in like this.
Dude, I don't know.
This white bottle. You've never heard of Mutai?
Maybe I've seen it. But dude, when it comes to alcohol, like I have zero class. Like zero class. Like it's got alcohol in it. I'm good to go. Let's go.
This is Mutai. It's the most valuable liquor company on the planet. Like it, and it's very, very simple. But
well, I guess it is because it's one of the top weighted things in the ZTF.
Yeah, dude. If you look at it, you'll be like, "What the hell?" Like this.
Are you sharing your screen?
I'm about to. So this is right here.
Oh, yeah.
So have you ever seen this before?
No, I've never seen that. In fact,
never.
That looks like the glue, the Elmer's glue that I bought for my daughter at Target the other day.
It probably tastes the same thing, man.
Yeah, it's got to taste the same. Well, I haven't tried Elmer's glue lately, so I can't really say.
China.
If you ever do business in China, well, at least like officially, like this is like one of the like the nationalistic drinks that they have there, and so there's like a ton of people that drink this stuff. So, and I mean, like dignitaries will toast to it. It comes in like this really small like drink. Very, very alcoholic content. It's very bitter.
What's the percentage?
Let me see. Proof. So it is 106 proof. So it's like 50% fucking liquor, dude.
That's Everclear. That's basically Everclear right there.
Everclear is 180 proof. Hold on, so 1 second.
Oh, really? Okay, so that's basically rubbing alcohol. Actually, you know what? 108 proof isn't that bad, but
Yeah, it is.
we're
It's still
talking about
pretty bad.
50%, dude. Yeah, that's right.
Yeah.
Everclear. Someone drinks with Everclear in
190.
college, man. Someone
It's
drinks some of that.
190 proof. It's 190 proof.
Wow,
That's what
that's
Everclear
insane,
is.
dude. That's insane.
Yeah.
But for the most part, let me share this tab. All right, so you were in FXI, you got the spreads, dude. I got the KWEB calls, and
Mhm.
I really had to take profit in that because I was naked as hell on those. So
Yeah.
if you think of FXI, the beta to FXI, when I say beta, I mean like the volatility of it up or down direction compared to the volatility of SP 500. KWEB is a lot more volatile. The premiums are more expensive and so on. So I got into that and I went naked on it. And you got to see what the holdings of this thing is. So it's basically 50% consumer cyclical. So it's like 50% of consumer facing companies like Amazon or something of China. So you got Alibaba in there, you have Tencent and so on, JD. Like this is the most economic sensitive stocks you could probably think of on a consumer scale. So like in our case, this would be like Amazon, Tesla, I can't really think of whatever, Nike, you know, whatever else consumer discretionary, extremely volatile. So like, for example, today, you know, it only pulled back a little bit, but I did lose like 20% of my profit. And, you know, this is where the greed comes in. Because I thought I was going to keep running, right? But today I decided to take 75% off the table and then marry the other 25%. So I'm still in the trade, but I mean, the thing runs so much. Like I would not, at a long-term basis, right? Like if you keep on letting greed take over and keep letting things run, you will not be able to consistently be profitable because there will be times where you do that and it turns red, and seeing a trade turn from green to red is not a fun thing to watch. I mean, you probably know what that is too. So
yeah.
For the most part, I mean, I did do a little bit of TA, like not even that much TA, but a little bit of light TA on this. Where is my other post? Oh yeah, by the way, Mark Zuckerberg is the second richest man in the world. Is that crazy? All right, so if we look at the Hang Seng Tech Index, so this is kind of tracking KWEB. It's heavily correlated with it. On a weekly scale, it's reaching this resistance that it hasn't even touched in 2022, and it is at a multi-year RSI high on a weekly scale. 94. This thing is from 0 to 100, and it's at 94. Now it can keep running. Okay, like clearly right now it can keep running, and you know it could just, the RSI is not a definitive indicator that it reached its top, right? RSI is probable, but that doesn't mean that it's going to happen, right? So this thing keep running. But for me, this was a swing trade for me. I do not see the risk reward to stay in this trade as heavy as I was anymore, right? But I will leave some runners on the table, and I think that's the same thing you're thinking, right? Do you see the risk and reward? Do you see the risk reward to stay in the trade still?
I mean, some portion of it, yeah. Easy money's pretty much been made, I think.
Yeah,
So we have to just be cautious, and yeah, just based our investing decisions based on that. So for me right now, I'm looking at like the Shanghai Composite, like I was saying before. So I'm gonna rotate some of that money more into this instead. I'll talk about it
sharing my
more on the
screen a second
Patreon.
ago.
What?
I was not sharing my screen before, was I?
I don't know.
Doing that.
But
Anyways, go ahead.
this is the index that I want to buy into now, right? So you can see this blip that we've had with this rise. This thing could pretty much go much higher than where it is today. Yeah. And the thing is, with all the stimulus and everything else, I think a lot of people are going to be buying into this index. So if you look at the Shanghai Composite right now on a like on a 2-year basis, you can see that giant move up, right? But even if you correlate this giant move up, it's still only peaked out, same thing as like April 2023. So it hasn't even got back to like a 10-year level yet, which was around 18. And the thing is, with all the stimulus measures and everything, I think this index definitely deserves probably another 50% higher in in what is that thing called, in valuation over the next couple of years, not like
Oh yeah.
instantly like tomorrow morning. So
Yeah, no,
so
for sure.
yeah.
It's going to keep going up. Like it's going to mean revert, right? Like your massive stimulus to the corporations, to the banks, and directly to the consumer. Like it's going to mean revert. It's going to keep going up. But when you're dealing with options, you're playing with the IV and the volatility. And right now, for me, it was the right time to capture that heightened volatility. And like I said, if this thing pulls back, like honestly, we see it happen so many times where it rips up so hard, and then by the time it's trading hours for the US, it already did its pullback. And you can't, like, you're not in futures, you're not in shares, you can't capitalize it overnight or pre-market or aftermarket, whatever. So you have to be pretty decisive in this. And when we saw today, I think I lost like not half, but I lost like a good amount. So, I decided to stay in a little bit longer. Then I had a huge pop in the day. And then that's when I started to take the profits. But honestly, it could have just kept going down. And guess what? I would have been kicking myself in the butt because I didn't manage risk.
Yeah. I think, like I said, easy money's already been made. Now it's the hard money, and the hard money is going to take time. So right now, I'm not playing this next thing with options. I'm just going to buy stock in it, and I'll talk more about it on the Patreon. I'll talk more about on the Patreon how to do that. So you'll see it in the China. If you're in the Patreon, it's in the China channel. So just look it up, and we can take a look over there.
Yeah. So what do you think is the most important thing when it comes to stock market? The most important thing?
I mean, I'd say depends on where you are in the market cycle. Like a lot of people, there's three things that I always keep in mind, and it's almost like concentric circles for me. Number one is, how is the general market? Like, is this in bull mode or bear mode? Because if it's in bear mode, you could be a great company, but you're still going to get shellacked. So your valuations are going to come down. So first of all, like if the directionality of the market is up, which 90% of the time it is up. So that's why that's why people who are in the S&P 500 index, they make money, because generally the market always goes up. 9 out of 10 years are usually up years. It's just that 1 year that comes that knocks shit out. So I would, let's say 7 years actually. But basically the general trend is the market. So if the market trend is up, you want to be in the market, right? Number two, you want to see, like, is that specific industry on upward trajectory? Is it on downward trajectory? So if it's an industry that's non-cyclical, like if you look at energy is cyclical, semiconductors is cyclical. So you kind of want to find industries that are not cyclical, that are like more up into the right. So that's another thing to look at, to make sure that you're not buying something at the cyclical top. You can buy things at the cyclical bottom, just don't buy it at the cyclical top. So the second thing is looking for the industry, and then you look at the performers within that industry and the valuations that they're getting. And then, then you just factor all those things in, and eventually you come to you get to the idea of things are going to go up or down, and then just buy those. That's it.
Pretty much. Check this out. So I think this is kind of what you're swaying toward.
Yeah, pretty much.
Put it in here. Yeah. So, right, it's gonna be a little blurry, but for the most part, yeah, you have your secular trends, which I'm not so sure what we are in the secular trend.
It's like yeah. Go ahead.
Yeah, in the business cycle, I think we're kind of reaching. This is the part where I kind of like debate with myself on, because right now the economic data does look like everything's fine, but we're seeing a little bit of deterioration in certain sectors and in certain parts. But even on a technical scale, we're seeing the momentum of the stock market kind of slowing down, but yet the breadth is expanding. So it's kind of hard to tell, are we just in a seasonality period or not? For me, I do think that we're still in the uptrend of a secular trend. So I will stay invested. But when we're talking about being tactical with options, which is highly leveraged assets and very dangerous, because if you hold it through the top of, like if you hold shares, throughout the entire secular trend, then you'll be fine. But if you hold options near the top of a business cycle, you're going to get murdered. I'm not so sure if you can classify 2022 as the bottom of a secular trend, but it was definitely the bottom of a business cycle, right? So you have like these, you have the green is the secular trend, and then you have the business cycle, which is the blue. So if you think about the stock market, it kind of looks like 6 to 12 months ahead. So you have like, these zigzags, whatever. And if you look at this chart, like we could have been over here in 2022, we could have been over here, we could have been over here, we could have been over here, like who knows? 2008, we were definitely over here, right? And then we went up. So on this chart, where do you think we are?
I'd say we were on the upward trend. Like the green, we're probably like at the top of it. Not at the top,
The top of a secular trend?
No. Like right here, all the way at the end. Like you could look at the COVID lows as probably the
Here?
bottom, like 2022. Yeah, so we're like somewhere around there. So we're on an upward trend because of AI, but then you see also the business cycle, we're on like a somewhat of a small downtrend, but these downtrends don't last very long. Like it just says 1 to 10 years, but I think like 2 years, whatever. So
Well,
I
yeah, in
think,
this current
yeah,
market, I think, yeah,
yeah. And
this
so
cycle is definitely shorter.
yeah, so I think we're on a recovery. Like there's still a lot of small cap and medium cap companies who haven't necessarily appreciated significantly yet that are going to benefit from a rate cutting cycle. So I think that is something that we have to keep in mind. So yeah.
Yeah, I mean, historically, the charts do show that when we get into a rate cutting cycle, we enter rate cutting cycle that is historically not bullish for the stock market in the short term. In the end, the bull market does continue to prevail. I do think we're in a bull market, but we've hit this period right now where we have lost momentum in the major companies from a technical basis. But we do have earnings coming up, so like we'll see what happens, right? But like you're saying, the comps are a little bit harder than they were before. The comps weren't easy comparing to quarters in early 2023 or 2022, where it was like, oh yeah, well if they grew like sequentially, maybe a few percentage points year over year, like that's going to be a big jump up. Considering sequentially they have been increasing the growth. When I say they, I'm talking about like a company's revenue, right? So when I think about this business cycle, I'm honestly I'm not sure if I would classify 2022 as being the bottom of a secular trend. I think we are continuing a secular trend, a very long secular trend, but I don't think we hit the bottom of the secular trend in 2022 because we wiped out a lot of retail investors and there was a bit of disbelief coming up. But at the same time, we are kind of continuing that tech innovative narrative because this idea of AI and everything that's been around forever. Well, not forever. It's been around for at least 10 years, but the market has, or the retail traders and Wall Street has labeled it as AI when in fact it's been machine learning the whole time. But now that they gave it a label, every single company is saying like, oh, okay, we need to capitalize off of this. So, on top of that, though, on a tactical scale, where do you think we are in terms of tactical scale? Do you think that we're on like here, or we're in the middle, or bottoming out? Like, what do you think?
I don't know, man. Just, I think we're at the bottom of a like we're getting closer to the bottom of a break. Like I don't know, breakdown is the right word, but I don't know. Tactically, I think it's going to depend on the companies, like individual companies, and like how they're playing out. I'm not sure I know how to be tactical with the entire index moving up and down in a I don't know, in a violent way like that. I don't know if anyone can really figure that out. I think long term, any people can make a pretty good, educated guess. But as you get closer and closer to like the more like near term, it's harder to figure that out. So I don't know.
Yep. Well, I mean, generally, that's why when it comes to shares, just stay invested. But yeah, that's a difficult game that it comes to when you're talking about, swing trading. But to be honest, like that, if you really want to have alpha, I think you have to get into certain derivatives that retail investors wouldn't normally get into, and you have to be strategic with it. And in the end, when I think of what is the most important thing, I think risk management is the most important thing. And because if you think of the business cycle, like the only reason why they come up with this stuff is for risk management for the most part, if you're projecting on the stock market. So I think risk management is the most important thing.
Yeah.
All right. So the last topic we're going to talk about is the nuclear run-up. We have saw a massive move in a lot of utilities, and specifically nuclear related stocks like CEG, Oklo, or OKLO, or CCJ. And a lot of it is really on the back of that. It's supporting this AI theme that when you have data centers with a lot of accelerated computing and GPUs, they're going to draw a lot of power, and that the existing grid doesn't support the amount of power that needs to be given to these data centers. So, big players like Microsoft are signing deals that they, like, for example, for the CEG one or the Constellation Energy Group one, they signed I think it was, I forget, it was 30 or a 20-year contract. But they signed a long-term contract that they would pay for all of the power from the 3 Mile unit, 3 Mile Island unit, for, I think it was like 20 years. But basically they signed a contract that they would do that, and it'll take about 3 years for that plant to come back online. And it was actually pretty interesting. I post a lot of charts on Twitter, but you really got to take these with a grain of salt. You can't just take one resource and just assume that is a fact. And even for myself, I wouldn't even say that everything that I say is true. And honestly, I don't think people do think that. But we have this chart right here, and I'll share it. Over here. So we have the first nuclear reactor units coming online since 2016. And if you look closer, in 2016, only one nuclear reactor came online. And this is just in the US, right? So before 2016, the last nuclear reactor that came online was in the 1990s. And we have 2 more coming online. So I think what's happening is that you have a lot of Wall Street. They know this. They know that a lot of nuclear reactors have come offline in the last decade. And they're thinking like, okay, this is the start of a new bull trend, so I need to get in this right now. And there's been quite a huge run up in a lot of uranium stocks. So I'm going to share my screen of a few companies on the chart. So the big one, all right, CEG, right? So these are Bollinger Bands. Let me actually take these out. Okay, so if we look at CEG on a weekly scale, like this thing has just been up and to the right, right? This move is getting pretty insane because I'm not okay. I've basically my way of investing in uranium was to buy the ETF and then figure out the leaders in there and then buy a little bit of the leaders. And CEG was my leader pick. It used to be CCJ, but I decided to switch to CEG, and that was pure luck. But I don't know, man. I'm looking at the valuations of this stuff, and it's pretty insane how much this has ran up. Like this company, it's an $86 billion cap, right? And it ran like 50% year to date. So before the year started, it was like about 40 something billion, right? And they're not even growing that much, right? But people are buying it in anticipation that the growth rate will explode. But that reactor will not come online until 2028. So what are you buying right now that you think that it's going to be able to reach or accommodate this valuation? So I have trimmed a lot of my shares of CEG as well as URA with the expectation that, it could probably keep running. But my expectation when I did originally invest it was to be part of a secular trend, make a lot of money on it. But I made a good amount in a very short period of time on the back of just news that came out. And I wouldn't even say it's as far as fundamentals, because it's just the market getting ahead of itself. And we've seen this countless times where people see they see something that's like kind of moving up, and it pulls back. Like over here, it reached its local high in May, and then it pulled back down here, into August, whatever. But like around this period, it was getting a lot of outflows, and the whole AI narrative was kind of taking a breather. So like, of course, it's going to sell off uranium stocks. That was like the whole theory behind it. And then it just pops because when people get very bearish, when sentiment gets pretty negative, it just takes one big catalyst for it to pop. kind of the same thing we saw with China. I feel like we're kind of seeing the same thing here with uranium, right? Like if you think about this is going to be a big deal at some point, but is it going to be a big deal right now? No, I showed you that graph where only one plant came online. Like, where do you think the capital is going to come from as far as revenue? Is it actually going to support this valuation? Like, do you think you're going to get in it right now because it's going to support and keep going up? Probably not. So I don't know. Like, what do you, in terms of energy, because I know that it's not just nuclear or it's not just uranium that you're going to derive energy from. There's also natural gas. I think natural gas has a lot of leg room, especially since with China coming back online, they use a lot of resources, not really nuclear. They use a lot of natural gas resources. It's very easy to process natural gas as well as oil. So like, what do you think is going to happen as far as the nuclear narrative, and like what kind of energy resources is China going to get from?
I mean, everyone else on the planet is basically investing in nuclear. So, I'd say nuclear has a great growth trajectory ahead of itself. And the thing is, like, with all this thing happening with Russia, people are looking to diversify their energy holdings. So, yeah, I'm in agreement. Nuclear's got some tailwinds. So,
yeah. So check this out. Let me bring up that other one. Hold on. Here it is. Okay, so China annual natural gas consumption by sector from 2010 to 2023. All right. Mm-hmm. This is the percentage change. This isn't a absolute value. Obviously, it's going up and to the right, right? This is just power that's generating. What have we seen outpace the other ones in terms of percentage change for natural gas? We've seen it come from industrial. And this only goes up till 2023. So this data isn't the newest, right? But look at the trend of how much it goes up. And what did China do recently? They revived their entire economy. So they basically just like injected an adrenaline shot into the entire economy. So as people consume more, as people spend more, as businesses fired all cylinders, they're going to need more power, right? And where is natural gas trading at right now? It's like just shy of $3. It's like at a multi-year low. Now I don't think natural. Oh, go ahead.
Well, it's $3 for us, Henry.
Oh, well, the currency difference.
Yeah. Not the currency. For us in the US, it's only $3. Internationally, Henry Hub is actually very expensive, and then Japan is actually very expensive right now. So if you look at natural gas markets outside the country, they're actually relatively at, they're not low, but they're not they're not high, but they're not low either. Because remember, for us, we produce natural gas at a very cheap price. If you look at Henry Hub prices, Henry Hub is only $2, $3, right? But this is not the price that the Europeans pay, nor is this the price that the Japanese pay. So if you look at hold on, like Dutch, let me tell you which index their natural gas index. It is Dutch TTF. Put that in there. So Europe, no, not Dutch Bros.
I know.
Dutch,
it's just TTF. Oh,
there you go. Yep. Yeah, click on that. So if you look at that, that is how much they pay.
Yeah, but what's the currency?
Dollars.
This is US dollars?
Yeah.
Probably because of Russia. But it looked like it kind of
not
here.
Not because of Russia, because it's just more expensive, man. They don't have a lot of natural gas like that. So they pay a lot more than we do.
Isn't Ukraine like have the biggest, most important pipeline for all
then
Europe
look at
and Germany?
Then look at Japan. So look at Japan's natural gas prices.
What is Japan? What is the?
It is LNG price per MMBTU. Japan. I forgot what the thing is, but they're trading at about 14, and the one for, hold on one second. Yeah, for Japan, it's right now around 14, and for Dutch TTF gas price is
It was like 40.
but I think there might be a little bit. No, so here's the way that this shit is listed is wrong. So the natural gas, like European Union, the Dutch TTF, that's based on euros per megawatt hour. The other one is by BCF. So they're two different like things. So it's not like you just load it one to one. So let me see if there's like a comparison chart that I have. Hold on, natural gas.
Are you sharing screen?
No, I'm looking it up right now.
Okay.
Comparison around the just find it. Sorry.
It's all good. What's going on, Dougie Dallas? Dougie Dallas. Oh my.
Okay, here we go.
We all make that mistake. It's like ETF phone home. Go ahead.
Okay, so let me just share my screen. Okay, so this is from the IEA, so International Energy Association, right? So these are the spot prices. This is Henry Hub for us. You can see here, we don't really pay much per on a MMBTU. So this is dollars per MMBTU. This is how much the Europeans pay and the Japanese pay. This is from 2022. So a more updated chart would be nice. Let me see if I can find it. But basically, this was one of the causes of giant, what is that thing called? Inflation. I'll find it eventually. I'll find it. Yeah, I'll find it and I'll let you know. But it's much more expensive for the Europeans and the Japanese than us. And that's how basically, you know, the investments in liquefied natural gas export facilities work, where it's very cheap in certain localities, like here in the United States. If they build a liquefied natural gas plant, they can liquefy it and then sell it overseas for much higher prices. So imagine right now buying something for $3 here in the US or $2 in the US and then selling it in the European markets for like 15. That's a 5x amount.
I'm sure some people are already trying to capitalize off that arbitrage. There has to be like some reason why it still stays suppressed. Because if that
Cheniere. No, there's a ton of them. That's why there's so much LNG development here in the US, right? That's why we're looking into next decade. Like that's one of the alphas that you have in there, which is liquefy it here. But the thing is, the cost of liquefying is pretty expensive too. So, but it still makes sense.
I haven't even looked into the next decade in a while. Oh, that thing is still suppressed. That's an interesting one. Maybe it's time to do a little bit of research on that one.
Yeah. We're at the 52 mark. Do you have anything else you want to cover?
No, that was pretty much it on the list. I actually thought we were going to talk about the China stuff a lot more, but it sounds like we're in agreement with that one.
The real question is, are we shorting Palantir?
Oh, well, I think someone asked that question actually in Discord. What was it? How to hedge your Palantir decision. You know how to hedge your Palantir decisions? You sell it. That's how you hedge your Palantir decision. Or you sell deep in the money calls, or you buy puts. I just don't advocate buying puts on it because like you're paying all that premium up front and the volatility of it is high. So it's like, why would you buy a put on it? Like I feel like even when the market rolled over, this thing was still going up. Like I would not short strength. Shorting strength, that's like shorting China right now. Like I'm not gonna short strength. That's just crazy to do that.
Yeah.
Only an insane man would short Palantir.
I'm not gonna short it, but I have you know what? Fuck it, I am gonna short it. But I'm not gonna tell anyone when I'm gonna short it and how much because I really don't need any more people praying for my downfall, bro. There's enough people. You know, I'm not gonna add to the list. But I do have a strategy that's I don't want to say low risk, but it's one of those things that doesn't require me to put up a lot of capital. And the payoff is pretty substantial if things work out. And I get a pretty good margin of safety. So don't ask me. I'm not going to tell anyone what I'm doing. It's just not in me. I really don't want to deal with the BS of that. But the point is, there are option strategies out there right now that will let you capitalize on
Iron Condors,
a downfall in Palantir. No, not just Iron Condors. There's other things too, but yeah, it's more of enough.
I can do
it. Stop trying to get it out of me. It's not gonna work.
I mean, honestly, This thing, it's obviously overvalued. I think everyone and their mother says it's overvalued, but I think that's what's fueling it is the fact that everyone keeps saying it's overvalued, so it's going to keep going up. It's just actually the market has its crazy ways of doing things. Like the more everyone goes on one side of the boat, the less likely it's going to happen, right? So if everyone thinks Palantir is overvalued and to reach its top, then guess what? It will just keep going up at that point. And when everyone gives up and buys it, says, you know what, I'm going to let it ride, that's when it goes down.
No, man. I just want to see Garcia's downfall at this point. That's it.
Follow Garcia.
Garcia has better returns, probably has better returns than I do, and all he's did is just buy Palantir. That's all he's done.
I mean,
it's like I'm here trying to figure things out, like 5D chess, how to move pieces around the chessboard, and this guy's just like pawn to like one more, and that's it.
Sometimes it's that easy. Sometimes it's that easy. I mean, you gotta admit, like having that much conviction to go full part in something, like that's some serious freaking conviction, and to hold through all the troughs and whatever, and not sell when it rate like that. That's not.
You do have to give.
That's not easy. Yeah, that's not easy, man. Especially when his insurance policy is not. No, I'm just kidding. I don't know if his insurance policy.
No, I will say he did play it smart. He did buy some puts.
Yeah. Oh, he did.
Yeah.
Interesting. Okay.
That's the one part I do like about him, that he's reasoned with his position. He's not just like, let me buy it to buy it, So Arnie's public portfolio is what? Just Palantir and Hood.
Is that his real portfolio, or is that the savvy trader?
That's a savvy trader, but he's also like that in his real life too. We have to get Arnie.
He's pretty young, so like, why not take the risk?
Arnie's not that young. He looks young because he works out probably, but he's
whenever I see his posts on Twitter, all I see are abs and a good looking face, and like you're gonna get a lot of likes if you post stuff like that. Like that's just like the perfect mix.
Can you
maybe huh?
$6 to freaking almost $40 now. 6 to 40 in less than 2 years. I mean, talk about just runners, bro.
That's crazy, dude. I mean,
it's got a forward PE of 110.
They were talking about that before, but like you can't talk about the forward PE of Palantir. They just became profitable on a consistent basis. It's like software stocks when they become profitable. Like you're not going to use their forward PE. You have to use their price to free cash flow. That's really the only way you're going to do it. That's one of the metrics you got to use. But they are expensive. You didn't run that metrics.
Or EBITDA, which is still like does not lend well to the thing. EV to EBITDA, you can use that, which is way more accurate.
I mean, they got a lot of cash in the balance sheet, so it's going to be even lower.
I mean, the market did you see Jamin Ball's like updates?
Yeah,
Snowflake's not even on there.
Like, yeah, no,
Snowflake's not even on there anymore.
It was actually pretty funny because that was like when I remember when Snowflake was on that list, it was like, wow, that's like one of the first times Snowflake is not on that list anymore. Like pretty crazy time we live in. And then you see some other names on there that never appeared in there before. And like starting to make its way to the top, like ServiceNow is near the top on that list. Like ServiceNow is freaking expensive right now, and no one talks about that shit, But to be honest, though, Palantir is a great freaking company. But
look at this thing. This is the thing that I was talking about.
Yeah,
take a look at this.
Yeah, Monday.com's in there. Guidewire, never even really heard of Guidewire, to be honest. OneStream just IPO'd recently. That thing is getting overbought like madman. Like I don't know how something that just went IPO can possibly be so expensive so soon, unless it starts with R and ends in M, like AR and then ends in M. ARM. Like I don't even know. Like OneStream, they build like software for financials. Like why are they so damn expensive right now? Samsara is just crazy. Yeah. CrowdStrike used to be all the way up there. CrowdStrike used to be number one, and then now Palantir.
Samsara is IoT. Like Internet of Things. Yeah. But no, I mean, you look at this thing, it's nuts, man. It is nuts.
Yeah.
So
look at Palo Alto, man. Pelosi's on there.
Yeah. The thing with Palantir is that in my opinion, the damn thing's manipulated. Like the stock is manipulated. So I'm not touching it on the long side. I will definitely I have some money to lose, so I don't mind, You
got a few milli to burn.
I got not $1 million. Don't say that.
I have 1,000 to burn, dude. You should have bought yourself a Taylor Swift guitar and smashed it.
Exactly. exactly. No, I feel like I think I know why this thing is run up so much. And it's, in my opinion, it's just heavily manipulated based on like some of the figures, and then the retail holding is just overly optimistic, and so eventually it will calm down. It's just the question is, what is it going to calm down to? So we'll see.
Yeah.
And then this fucking guy Dan Ives, that piece of shit, he's the one that technically blew up my
Well, you know
short,
that guy's
bro.
getting paid. You know he's getting paid to make
Son
all
of a
these
bitch.
calls. Pumping Palantir, Tesla, and I think Apple was one of them too. There was a stock that he had nothing good to say about, though. Was it Intel? I don't know.
I don't know.
All right. We are at that 60-minute mark. Everybody, thank you very much for watching. The recording will be available. And if you haven't, please support the channel by subscribing, liking, and turning on notification bell. So that is it. Speak to you guys next time. Have a good night.
Later. Take care.